What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is September 28th of 2019. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we've got a lot of key things to focus in on. We're going to start off by taking a look over cryptocurrency market data to try to figure out where the market leaders are. Outside of that as well, we'll talk about a very important announcement for those of you who participated in the Energi earn drop campaign. Very important for you guys to stick around if you did partake in that. And then outside of that as well, we're going to be diving into what might be a perfect storm for equities to correct over the next few weeks as we have growing fears in the general tech sector as well as US traded Chinese stocks. So we've got a lot of interesting things to dive into, guys. Let's go ahead and take a look at the market here. Now, as we can see, most cryptocurrencies are in the red at the moment. And along with that as well, global market caps are pushing very close to around $200 billion, which, important to note, is twice as much as where we had our bottom in the overall market cap at $100 billion. So I think that might be a really good level to spot here in the sense of overall market valuations finding a bottom here in the short term. Now, outside of that as well, we're really going to be talking about market dominance. This is a key indicator that I want to talk about. But before we dive into that, I just want to let you all know, again, the important announcement here for Energi, just in case if you guys are short on time. If you happen to partake in the Energi earn drop campaign and you didn't finish your KYC, don't worry, you're not too late to the party. They're actually going to reopen round 2 and 3. Now, the reason they're doing this is because they not only got a lot of requests to reopen it, but from my knowledge as well, there was a lot of fake registrations on the earn drop campaign. And they actually exposed it was up to like 10 or 20% that they were able to detect as they went through it. So this means that there's a lot of openings for people who didn't get into the window of time where they made it available. So guys, it's like a few $100s worth of cryptocurrency. I would definitely do it in that case if you guys haven't already. So again, I'll leave a link down below in the description, all the resources you need down below so you guys can go ahead and participate in that earn drop campaign. Now, this is, again, what it'll look like here if you go through the links here, and you can find that link that you need. If the link doesn't work down below, you can find it through the earn drop link right here under Get Energy at energy.world. All right, so just wanted to go through that to let you guys know. So let's go ahead and take a look at some data for the market here. Now, again, guys, the key thing here that I'm really focusing in on is right now I'm allocating my capital into cryptocurrency markets, especially now that there has been a pullback of 40 to 50%. All right, this is what I look for here as a trader. Usually we get excited after 30 to 40% corrections when we start to enter into a phase that might be setting up for the next bull market. But putting that aside, right now, overall, I'm just looking for trend shifts, right? I'm looking for, what's going to be the next move over the next few weeks, the next few months, right? And where should I have my allocated capital, right? Where should I have my capital allocated? Guys, I'm telling you, maybe we need to do like videos in the afternoon and stuff because sometimes I'm not with it in the morning. Anyways, the main point here I want to stride is really what's going on between Bitcoin dominance to altcoin dominance. I'm not preaching that the overall altcoin market's going back, guys. No, we're not going to get what we got in December of 2017. That was probably a once. Actually, maybe in the next cycle we'll get something relatively similar to it where the overall market's moving. But quite frankly, I think in these early days, guys, we're setting up for what players are going to inevitably either keep up with Bitcoin or outpace Bitcoin in this next cycle to regain some of this market dominance we've lost. Right, we've lost more. We've basically doubled Bitcoin dominance from the bottom here, around 35 to 72 up here. And now we're testing back below 70%. And this has been a pretty interesting change of tone here, right? We were setting up consistent higher lows and higher highs, and it started to get to a point where there was a squeeze here. The lows were not as higher as their previous lows in the past, and also the highs were slowing down in their momentum as well. And we're now starting to see what could be only really seen as a serious trend shift. Now, why do I say that? Well, squeeze momentum indicator for the last 4 weeks has been on a decline. It showed us that ever since back here during its peak here at around 72 to 73. The MACD on the weekly, closing its divergence and looking like it's ready for a cross by next week. Stochastic RSI, both lines coming from the top here that have been holding for a while throughout the rally. Both lines now into the neutral zone here, showcasing us that the tone has shifted to a bearish narrative as we've started to cross downward. So all three indicators for me are flashing good on the weekly, right? This is what I look for here. When I can get all three weekly indicators showcasing this, I get really excited. Not to mention, we're in the overextended range. This is the reason I call this that is because this is where we sold off back in July, and also where we hit resistance as well in December when we started the next cycle. This is a very key and important level to take into mind. And again, you wouldn't probably notice this if you just looked at the daily. Right? If you just looked at the daily, you might not be able to gain as much intel. The indicators probably aren't as relevant, right? And this is the really key thing to take into mind, guys. Now, even on the daily, this looks good. Lowering highs, lowering lows. What I want to see here that's really going to confirm the trend is us getting a sell-off where we really come down here to 66% in the next week or so. It's really got to happen here soon, I believe, to really showcase the trend shift, and that's when the momentum will kick in. But right now, it's looking really good. Now, as I mentioned earlier, you might be wondering about my comment where I said, Nick, you said that you're not calling for the whole overall altcoin market to come back, yet you're expecting dominance to go down and possibly even retest this line down here around 55 to 56 over the next few weeks. Or I'd really actually put that in a term of months going into the winter. Why are you so confident on altcoin dominance dropping if that's the case? I want to be specific. When I say that, I'm saying that I don't believe that all altcoins are coming back. I do believe a few key players are coming back. And we're already seeing that materialize in price. And I'll showcase that. So if we take a look at some of the major players, some of the well-developed players like Ethereum, rightfully so, Ethereum has been getting a really solid rebound over the last few weeks. Even during this correction that we had over the last few days, look at how Ethereum's performed. It's come right back against Bitcoin, right? Its sell side has been matched by a multitude of days of buy side action, where price is coming back up here, at least, the Satoshi comparative in this case, or Bitcoin comparative, is coming back up to its previous relative highs. And if we really break out above this previous resistance range here, I think this is going to be the kickstart to the cycle, guys. I think this is going to be really setting up for dominance to start dropping as Bitcoin possibly gets some confidence back into price. We start moving higher. This is where I really get excited. If we take a look here on the weekly, again, on the weekly indicators, stochastic RSI looking good. MACD has crossed the squeeze momentum indicator. 3 weeks here, where we've started to now have higher levels in this case. No, sorry, 2 levels. 2 weeks where we've had a higher levels in the squeeze momentum indicator. Again, these are signs to me that get me really optimistic. All indicators are pointing to it. Not to mention, if we really take a look at the longer term window here, we'll go ahead and put up here. I think on Poloniex would be probably where you get the best data. Yeah. Let's be honest, guys. Thinking in the longer term cycles here, thinking back on how cryptocurrencies have major corrections, right? Near 90% correction from top to bottom here on Ethereum, right? I can't even get the exact one, but I think it's near about 90%. With all that's going on in the DeFi movement, the exciting applications that are being built on Ethereum, not to mention as well, quite frankly, if you want to look at block activity, like actual transactions, Ethereum's blocks are practically full most of the time because of what's going on in the DeFi space. Do you really want to bet against this? That there might be some speculators coming. And even if ETH doesn't work in the long term, would you want to bet against that? Right? I know some people have switched to a maximalism perspective, and that's fine. I believe Bitcoin has proven more than any other blockchain project for the most part. But I got to tell you, Ethereum's a close contender to that. And I love discounts like this. I love when prices are cheap like this. So, again, you guys got to determine. I'm not trying to show you Ethereum by any means. No one's paying me to show Ethereum. I'm just letting you all know that I like to look for market shifts. And I'm definitely going to have some exposure, not only probably to Ethereum, but also to other ERC20 tokens that are building value on top of the Ethereum blockchain. What are some of those? Well, we've talked about it here on the channel, right? I've talked about BAT before. Now BAT, oh god, I gotta turn off my drawings here. This is for the, usually I'm looking at well, I usually have a wider chart here for the newsletter where I write that stuff. But as you can see here, again, setting the higher lows here, right? Consistent lows here, higher low range here, higher highs. This is what I want to see. I want to see the momentum kick in, right? If we take a look at that weekly, again, everything's coming into play here. Squeeze momentum indicator, weekly MACD has been lowering that divergence for a while, looking like it's ready for a cross, and both lines are into the neutral territory after entering from the bottom, which is a bullish sign, right? Let's take a look. Chainlink, right? Link BTC, Binance, right? Haven't gotten the indicators coming through yet. It looks like we're closing that divergence. The squeeze momentum indicator, if we get another week or two up, this is going to actually start reversing soon. And then we're also going to see here as well a potential rise of the stochastic RSI in the next week or so going into October. Again, indicators aren't showing it just yet, but we can see here that Link has been going up. It's gone up 33% comparative to Bitcoin over these last 2 weeks. That's good stuff. That's important to note. So these are 3 of our top plays. We've got some other ones that we've talked about as well. We don't have time to look through all of the altcoins in the world, but that's the thing to keep in mind, guys, that we are seeing altcoins gain or lose less than Bitcoin in this case, which is still a very important thing to take into mind. It means that people aren't panic selling. It used to be that when Bitcoin sells, altcoins sell even more. So when you start seeing those trend shifts, notice it in the market. You know, don't fall into a bias in this case of what's going to happen. I'm not guaranteeing that all altcoins are going up. I have a belief that a lot of them are going to continue to go down and probably never come back. Sorry, it's the reality. But you know, we've got a lot of exciting projects as well that are doing some really interesting stuff. So I wouldn't discount that reality. All right. So we've got to talk about a few key things. Now, I'd hinted towards the beginning of the video to talk about what might actually kind of serve as an additional catalyst to bring down markets. There's one thing I didn't mention here, and that's the first thing I want to talk about here. We'll talk about the general tech sector. We'll talk about what's going on with U.S. traded Chinese stocks, what that really could serve as a catalyst to pull markets down here. But I want to talk a little bit about one of the biggest things that has been keeping up markets over the last few years, and that is stock buybacks and dividends. Dividends keep investors around in stocks that may be overvalued because they like the residual income that they get from it. And along with that as well, stock buybacks keep people comfortable with the idea that a stock is going to continue to go up because it's guaranteed buyers. It's guaranteed liquidity extracting shares off the market, right? Well, what happens when the buybacks and the dividends run out? That's exactly what we saw here in Q2. People at Yardeni have actually put out some really good research here and have showcased that we've seen a serious decline in dividends and stock buybacks in 2019, right? So the thing about the dividends here is the dividends are actually quite fine from what we can see here, right? The 4-quarter sum, we're still above the 4-quarter sum. What we're really seeing a drop back in is stock buybacks. And this is coming due to a lack of corporate earnings. Now, to try to explain this best, guys, the thing about dividends is dividends usually rarely drop. You can see they really don't drop until they kind of flatline, but they dropped in 2008 when the recession started to hit. That's when companies start making cutbacks. For example, in the oil and natural gas sector, when it was very obvious that prices were getting to uncomfortable levels for these companies where it would make them unprofitable if they're paying out these dividends. That's when companies start to cut their dividends. That's the first kind of resort that they go to. Now, it's generally the last resort in this case. The first thing they're going to do is stop stock buybacks if they're repurchasing their own shares. And that's what we've seen here since the last quarter of 2018. A really big decline here on a quarterly basis, where there's tens of billions of dollars less being repurchased here. And this reminds me of a very similar trend, what we saw back in 2007, the peak out. Again, a very similar but more kind of drawn out pattern here of a curvature in stock buybacks, right? We can see this kind of curvature and then the breakout, the final peak, the euphoria, the tax cuts that came through, the repatriation of funds to the United States, which should have gone into the economy, but it didn't. It went in to equities. It went into assets and propped up the asset bubble even further. It didn't really help out the average American, which really sucks because I was a big supporter of the tax cuts. I just wish there would have been a set of incentives to put it into other things other than stock buybacks, but we didn't get that. Now, the thing I want to talk about here is against the average here. What happened last time when we had a severe breakdown against this line, a severe gap between the average? We stepped into a recession. Markets started to correct. Assets became no longer attractive. The fundamentals that have been brewing under the surface finally came to roost. Right? And dividends tend to be a lagging indicator here. We can see that they did not drop below the average until 2008 to 2009. So the stock buybacks are what we want to watch. That is the artificial buy-side volume on markets. Right? And some people say, oh, it's not artificial, it's real money, Nick. Oh, it's true. But you know what happens and why I define it as artificial is because that is being bought through the company's balance sheet, right? Cash should most likely be used to build products and services, to expand your customer base. But when it's used to artificially prop up a stock while the company insiders and the Wall Street investors are selling off their stocks into that buy-side liquidity, then eventually you get to a point where there is no buyers and the stock price plummets. And now the company, in this case, has lost a ton of cash when it was originally cash rich, and now owns a ton of equities that are irrelevant, that are worth much less. And it's even more scary when companies are borrowing money to buy up their own shares. That's even more concerning. It's not as big. I don't want to blow it up as a serious concern, but that is something that's important to take into account. There are some companies that do that. So we'll keep an eye on this, wait for Q3 results to come in. It'll be a little while, but we will get them inevitably. But I do want to talk about another thing that I think is really going to play in tandem with this decline in stock buybacks, the decline in buy-side liquidity that we've kind of seen materializing in markets as we really push sideways towards our recent highs across the indices. And that is that we have two major pressures coming in. The White House weighing in limits on investment into Chinese companies, predominantly traded in the United States, through ADRs, which is a form of basically being able to trade Chinese stocks that are traded on U.S. exchanges, right? So it's kind of through countries like the Cayman Islands, in certain areas, the kind of offshore parts of the world, where they build these interesting structures where you can own equity in these Chinese companies and other foreign companies. And they're also not just ownership of those companies, but they're actually officially traded in the United States. This is something that the United States is looking to limit. Now, a lot of people at first glance would be like, oh my God, this is ridiculous. We had a huge sell-off because of this. This is terrible. We're cutting off the free trade that's going on in the economy. Shouldn't we be able to invest in companies? And shouldn't Chinese companies be able to be traded in the United States as U.S. companies are, right? I mean, I think all of us would agree. Absolutely. That's a great thing. I want to be able to invest in Alibaba because I love a lot of what's going on in China. I think Chinese people are wonderful. I think that the economy is extremely efficient, and the Chinese culture and everything, it's great. I want to be able to have an opportunity to invest in those people, as I do believe they should be able to invest in me. It is a very libertarian belief of mine. But as we have talked about a lot here on the channel, there's a very big problem with China. Actually, there's a set of a lot of big problems in China, and that is that China really hasn't played fair, right? China has not played by the books. And the major reason here that this proposition has come up is because they are considering delisting Chinese companies that are based on U.S. exchanges that do not play by the books to what the United States has for securities law. This is something that I read. Kyle Bass has been tweeting about this. He's been on Real Vision a lot. You guys should definitely check him out if you're looking for an interesting perspective onto what's going on in China. He was putting out a storm of tweets the other day, talking about how there was a Chinese lobbyist coming into the Congress, and again, really trying to kind of swindle kind of our representatives into not applying heavy regulation on Chinese investments in the United States. Kyle Bass has been really pushing this up. I think he summarizes it good in a tweet here that he just put out a few hours ago. Why is it that Chinese companies that sell stocks and bonds in the U.S. to U.S. investors, so ADRs, other types of financial products, don't have to submit themselves to a PCAOB covered audits or be Dodd-Frank compliant? So these are the kind of standard regulation sets that any security has to go through in the United States, right? These are the things that we set on U.S. companies, on U.S. financial products like ETFs, that supposedly China does not have to be compliant to. The U.S. should require any securities sold in the U.S. to adhere to U.S. securities law. Crazy idea, right? And the reason this is so important, guys, is because if we don't set them up to these securities laws, we not only are not setting standards about what's going on behind the scenes in trading in relation to these different types of assets, but we are not setting standards on them reporting their financials. And that is extremely important. If Alibaba or some other country's company that we're trading in the United States is not reporting its sound real financials, and they're not held accountable like they would be in the United States, that is a huge issue. If these companies overseas are not respecting intellectual property laws of traditional U.S. companies where they're stealing that technology, that's a problem. That is not libertarian by any means. That is not what I imagine or what I envision should be the case. And I absolutely agree, guys. I know a lot of you are like, oh, Nick, securities law, blah, blah, blah. You're talking in a very statist mindset, or you're kissing up to the government. Look, guys, when it comes to real securities, there needs to be law. There needs to be an understanding, because it not only is important to make sure that we have recorded real financials of a company, right? Imagine tomorrow if Coca-Cola cooked the books, what that would do to the stock price, right? This isn't just a simple world where we can just say, oh, no, we don't need any government in this case. It's a huge issue if we don't have real financials and standards set in place for companies who are reporting it. And along with that, it's another thing as well to be concerned that we don't know exactly how these Chinese companies operate, and they're publicly traded like we do commonly with U.S. companies. So that's the problem here, right? And not to mention, I think respect of intellectual property should be, if we're going to respect Chinese intellectual property, China should respect the U.S.'s intellectual property, especially the tech that they've been stealing for the last decade. I'm sorry. It's just the truth, guys. But there's another thing going on as well, and this is something that, again, some of you may agree or disagree with, but there was a big loss of market cap, around $56 billion between the FANG stocks the other day, as Trump gave a speech in the UN talking about the big censorship that's going on in the tech sector and potentially implementing antitrust regulations. Now, we've talked about this on the channel before. It materialized a little bit the other day in the market by dropping valuations after the speech. And I will say that I have a very neutral tone on this. I don't want to destroy tech companies, right? I don't see, some of them are getting close to monopolies. Some aren't, to be fair. We have to be really clear about a definition of a monopoly. But the point I want to get across here is that this is a real serious thing we need to address, guys. I've had, for example, here on my channel, I had one strike in the past, and we don't know why we got it. We had no clarification. YouTube said we supposedly broke the guidelines. I was like, can you tell me why, on this video I broke the guidelines? And they don't tell you. It's almost kind of like a mafia in a sense. They don't have to answer to you. And it's the same thing with Facebook, the same thing with all these different platforms, these social platforms, Twitter, whatever it may be. And they'll continue to do it as long as, the government doesn't step in. They've kind of slowed down on it recently because I think they've started to realize that this is serious, that there is potential antitrust regulators that are going to step in and really, put the I'm trying to think of a saying now. Honestly, they should just ban me because I can't come up with proper sayings. I can understand. Maybe that's why I broke the community guidelines. They're really going to start setting the standard in this case to signal that this is no longer a laughing matter. These need to be platforms where we can have free discussion. They are private companies at the end of the day, 100% agree. But you can't downright deplatform someone, especially if they haven't broken the community guidelines and if they're just simply having an opinion of some sort. That's not enough to bring someone down off a platform. It really isn't. There's no excuse for it. I'm sorry. I can't think of anything practically in my mind. And you guys know, just a moment ago, I was showing you a good example of how I view things. I try to view things in a non-biased lens. But when you start censoring one person, right, unless they have clearly broken community guidelines, they have posted a threat, they have posted, lewd material that has been clearly stated is not allowed on a website, things of that sort. When you start censoring people for political beliefs, that's a really scary thing, because it would be like censoring us from having our opinions on cryptocurrencies. What if politically us having an opinion on crypto is a threat to the United States due to the power of the US dollar or the US government and collecting tax revenue, right? What if the US just decided that that was the case, or Twitter or Facebook decided that? Or maybe YouTube, and my channel gets removed. That's not right. I'm not just thinking of my self-interest, I'm thinking in the interest of everyday people who should have a right to express their opinions. And eventually, they're either going to have to fix this at tech companies, or this is going to come to roost. And this could be a huge pressure on tech companies. We're already seeing the NASDAQ, which used to be the market leader, now lagging behind the S&P 500 and the Dow Jones, and pushing towards the bottom line of this ascending wedge. Could we be finally seeing the breakdown? MACD is already crossed. Stochastic RSI, really mixed here. Right, we haven't even touched the top range here, but again, the indicators are kind of mixed here. What scares me more than anything is the price. We're now setting lower highs again. I don't know, guys. All I can tell you is that, again, I understand crypto has not been through a good week in the sense of the market price action, but it's crazy enough to think that crypto still for 2019 is still the best performing market. It's still better than gold and silver. It's still better than equities, and it sure as hell is still better than fixed income markets like treasuries. We really need to understand where we want to park our capital over the next year or two. And I can't determine that for you guys. I've already determined it for myself, as I'm the only person I should be able to control in the sense of my financial decisions, as well as with you. In that case, you should be able to control your own financial destiny in that case. And I'm fine taking a little bit of the hits and averaging in, because quite frankly, I think crypto is going to be one of the best performing markets in 2019, 2020, and 2021. We'll have to see, though. It's going to be an exciting few years here, I think, guys, as we set up for a lot of global fear here with equities. Don't know how big a potential recession would be, but I'd like to hear what you all think down below in the comments. Right? We've talked about a lot of things today, but I won't hold you up any longer. You've heard me ramble on enough, and hopefully you'll join me for another session of rambling in tomorrow's episode. That being said, everyone, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.